Alright guys, welcome back to the channel. Appreciate you being here. I want to share with you lots of opportunities today. One specific, very nice opportunity. There's been lots of movement in the market, and if you stay to the end, I'm going to share with you a real good insight and a tip for your trading so that you can refine your edge and really build discretion as a trader, and it's going to help you out tremendously, particularly if you're a structure-based trader. So stay to the end. I wanted to put out a few opportunities for you guys because you guys know I like to give you not hindsight trades, because we can all do that, but I like to give you real-time analysis so that you guys can follow along, just see the thought process, but also just the kind of honesty in what trading's really about, because there's quite a few movements in the market. As you can see from looking at these charts, we've had a break above and below some really significant price points on many of these markets. Aussie CAD broken above that 9300 level, where if we push down we can potentially see a buying opportunity there. Aussie dollar, we're seeing some bullish movement. Pound dollar, there's a pattern trade, ratio pattern trade there for you guys that trade Gartley setups. This is just a demonstration setup here that I took for a Q&A that I did last night. But there's also a break and close below on the euro dollar, so there's some potential shorting opportunities there, but we're still, still falling off a cliff. You don't really want to be catching a falling knife. You want to be looking for those opportunities, have the patience to wait to get in those opportunities that give you the best reward to risk and have the highest probability. But one of the ones I want to share with you is Pound Aussie, because this is some of the analysis I did last night. I'll share that with you in a moment. And then Pound Yen, again, we're seeing some bearish movement there. Dollar Yen, not too much, still consolidating. New Zealand dollar, we're pushing up. There's potentially another setup here, but I'm not going to go through that. The juiciest one that I want to share with you is on the Pound Aussie. The Pound Aussie, before I get into it, right, this is a big pair in terms of average true range, which means that you can potentially earn a lot of money, but you can also lose a lot of money. So normally with this pair, I get a shallow window for entry because I need tight stops, good reward to risk, and high probability setup. So I don't get as many opportunities on this pair as some of the other pairs. But we are approaching a real nice setup, and this should just reinforce the importance of having patience to let your the quality trades play out. Because when I did the Q&A last night, I did some pre-market analysis. It was just kind of a relaxed, the markets were closed, didn't have access to placing orders or anything like that, and we were trading on yesterday's candle around 79.55, and this was the line that I drew on last night, and I said, look, if we push into this zone here in the morning, this is a significant level of structure. Not only support, but previous resistance, and more often than not, when this price point or this zone here is tested, it's respected. So something really, real nice opportunity if price was to push down there. Once price pushed down there, then we could start looking at how price is behaving and see if there's any confirmation that we're likely to see a hold or even a little bounce for a structure-based long. Now, let's just talk about what's happening in the market, right? First of all, what I love about this, what is sore thumb and what stands out, is the fact that we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bearish candles in a row. Okay, 12 bearish candles in a row. One, we know that doesn't go on forever. Two, we know that price respects structure. So if we've got a structure zone looking left and it's a high, a major level of structure, we can start identifying that zone for a potential reversal or a reaction. Now, the next thing to do, we're still going to have some patience, because this is the decision point candle. If we close below this low, we're likely to push down. If we close in this zone or above, there's a high probability we're going to see some consolidation, or we're going to see a bounce or a hold. And that's great, right? So that's the first indication that we're interested in this zone. The second thing is, look at RSI. Conventionally, RSI is considered oversold at 30. I have my lower limit at 20 because I use it as an extreme filter. We're actually down at 3.8. In fact, I think we got down to 3.2. So 3.2 is extremely oversold. So what we want to look for now, we know we're interested in this zone. Now it's a case of going right onto my trading time frame and going, how is price behaving? Is there any indication or clues that market's likely to reverse at this level? It could be a descending channel, could be a double bottom if you're more conservative. It could be a 3-bar reversal, it could be a doji, it could be tweezer bottoms. Any of those kind of setups to see deceleration. We're looking for a loss of momentum. and we're looking for clues. So you can see here that we've already hit this level like a wall on the 4 hour. We had a little bit of a bullish relief on the 4 hour. There could potentially be a double bottom entry. Look at this, right? We're down on the 60-minute now, and this is the entry. This could be the entry. So this would be considered my lower time frame entry, and all we're looking for now, we've had that initial test, right, which hasn't broken the previous low. This is the low. Okay, so let's just color this zone in a different color. Let's color this in, I don't know, pink. So this is the major structure zone. This is the low of the initial test. So you can see the initial test is here. Still oversold on RSI. Now we're putting in a double bottom. We've got RSI divergence. So we've got nice divergence on the RSI, bullish divergence. And you want to check out the difference between regular divergence, which is for a reversal, or hidden divergence, which is for a continuation. That's going to keep you on, you know, the better trades, the higher probability trades, and keep you out of low probability trades. All we need now is this price to be tested, 1.7774, 77.74. If that price is tested, and as long as we don't close below this low, and as long as we don't close like way up here, we can enter this, and then we can start looking at getting orders in. So where do the orders go? Well, first of all, let's just say we close, you know, let's just say we close down here somewhere. Obviously, we have to test that low, so it's not valid at the moment. You don't want to be placing orders yet. ATR-based stop below the low. And then what I do is I go out to the 4 hour, and I'll be looking for structure for my target. So I don't personally, I'm very conservative when it comes to structure-based longs. Now, for some of you guys, because we've fallen off such a cliff, you might be looking up here for targets, 81.25, which is his previous support level. Or you just look to take some targets off at the first level of structure. So for me, it'd be this little pause here, and then trail stops to target 2s and split your position in half. But either way, you know, this is still a 2-to-1, 155 pips to targets. Pretty happy with that. This is going to be a nice trade if I can get in, and it's just literally a case of waiting for the test of this initial high. Once that's met, as long as we don't close below the low, I can get in. So that's the trade I'm looking at. I want to just share it with you before it plays out, so you can get all the guys going, it was wrong, it didn't play out, and all that, because they don't understand what trading's about. But it also gives you guys who are serious about trading the chance to see a real approach, what I'm really looking at, and you'll see sometimes they play out, sometimes they don't, and when they do, you get involved, and when they don't, you don't, and that's it. Now, one last thing to mention on this, what I want to share with you is a little kind of tip, little hack, which I want to share with you here. So let's talk about this, right? The initial analysis here that I did was we pushed down towards previous structure. Now, every time that this is tested and it's support, it's tested more often than it's not. It's respected more often than it's not, okay? There's a reaction more often than it's not. That's not always the case in both directions. So when you're testing some of these things, as to build discretion as a trader, take note of how many times the price is respected on the way up, and how many times it's respected on the way down. In other words, how many times it's respected as resistance and how many times it's respected as support. And you might find that actually some of the pairs, you might find that it's highly respected as support. You know, you might have 10 previous tests on a higher time frame, but you might only have 2 on resistance. Right? And that's really important. That's going to give you a little edge, a little edge in your trading, that you know now, actually, when we're on the way down, I can look for a long at this level, and I can be more aggressive. Whereas if we're on the way up to that price point, I discard any kind of double top entries or anything like that. I don't look for structure-based setups. So it's really going to add to your kind of toolbox of and your edge as a trader. So hope you enjoyed that. Let me know if you're looking at this, how you're trading it, what your entries would be. Let me know if you're looking at any setups on the radar in the comments as well. And until next time, take care. Subscribe to this channel. Have a great rest of your day, and I'll see you then.